Competition in the banking sector took a big leap forward this week with the launch of a number of online, mobile-only platform Neobanks. Now, these financial organisations are backed by the government, just like the Big Four, but have no physical branches. So, how will the traditional banks react, and will Australians warm to them? It's called Zinja. It sounds millennial because that's who it's targeting.
It all operates through your mobile phone.
The business received its full banking licence from the prudential regulator earlier this week, allowing it to launch transaction accounts to its 13,000 customers. Savings accounts will follow soon, home loans next year.
We anticipate people using it just like a normal bank account. So have your salary paid into it, do your direct debits out of it.
It's all held in the cloud.
What that means is you don't pay for branches, you don't pay for old legacy technology.
That won't suit customers who do like to have the ability to go in and interact with their bank face to face.
There are advantages.
Minimal fees, generous rates of interest and killer banking apps that promise to help you better manage your money.
It's that personalised experience which attracted Sean Murphy to rival Neobank 86400, named after the number of seconds in a day, which also launched this week with transaction and savings accounts.
Once it obtains more data about my lifestyle and spending, it'll recommend what subscriptions that I'm using and not using.
And provide notifications on upcoming bills. The app merges data from his existing bank.
My core home loan and personal things are with a major bank. And I think it's complementing that at the moment.
Suggesting a place still for traditional players, which combined service 18 million customers.
Australians are very loyal to the Big Four banks, despite all the horrors of the Royal Commission.
Experts say it's way too early to tell if neobanks will impact bank profits and dividends.
They're only targeting at this minute a very small part of the overall banking model. They're not as diverse as a traditional bank.
Overseas experience suggests while neobanks found early adopters,
but found the ongoing race a little bit more difficult to win.
There are other licensed players in the market, like small business lender Judo, Up, which uses the licence of Bendigo and Adelaide Bank, and Volt Bank, which is preparing to launch. One of the biggest challenges for these new neobanks is trust. Given the lack of brand awareness and no branches, how can customers feel secure about their money?
Well, they've received a full banking licence as approved by APRA, which effectively means that they've got the government seal of approval, plus they fall under the deposit guarantee of $250,000, which is what a traditional bank also receives.
Forcing the big players to jump on the front foot and enhance their own digital offering, a win for consumers across the board.